RSUs are complicated and confusing. Is it cash? Is it stock? What do I do with it? That's before we even talk about tax. Your RSUs may be the start of a real tax nightmare. Here's what you need to know about how RSUs work. And the easiest way to understand RSUs is to start with three key terms that relate to your restricted stock units. The first is grant. And so when you accept the job or you first receive RSUs, you're usually going to get a grant agreement. And your RSUs will be expressed as a total dollar amount at hire that then gets converted to shares. The next key term to understand about how RSUs work is vest. And so you get a total dollar amount converted to a number of shares that you then receive over a time-based vesting schedule. So it's super common to see this time-based vesting schedule occur over 4 years, either monthly or quarterly. And the vest is when the RSUs become shares that you actually own, that you get to keep if you were to leave your company. And the final key term is settlement or release. Now, in most companies after IPO, vest and settlement or release are usually one and the same. They happen at the same time. But settlement or release is when the shares from your RSUs are actually delivered to you. And prior to IPO, you may be dealing with RSUs that have a time-based vesting schedule, but then an event-based trigger for settlement or release, to where over time you're accumulating your RSUs. They are shares that you own, but those shares are not actually delivered to you until the event-based trigger. The other thing that's important to know about settlement or release is when those shares are delivered to you is when income tax is assessed on your RSUs. And so going back to grant, your RSUs were expressed as a total dollar amount, but your taxes are not going to be based on your grant. Your taxes are going to be based on the settlement or release, the value of your RSUs when those shares are actually delivered to you. And so that value is going to vary based on the performance of your company's stock. And the tax that you owe is also going to vary. The other thing that's important to know about how RSUs work is the most common thing that we see happen at settlement related to taxes is what's called sell to cover. And so RSUs are a supplemental wage, and with that, they require mandatory withholding. The most common way that withholding is satisfied is through sell to cover, which is where at settlement, a portion of your RSUs will be automatically sold. The cash from that sale will be used to pay the income tax withholding, and you'll only receive the remaining amount. So it's typical, especially for our clients living in California, for about 40% of their RSUs on each settlement date to be sold in a sell to cover to take care of the mandatory withholdings. The other thing that's important to understand is that just because you have mandatory withholding and a portion of your RSUs is being sold to cover the taxes does not mean that you're done in terms of taxes owed, because the standard withholding on RSUs as a supplemental wage is 22%. And a lot of our clients are in a 32, a 35, or a 37% tax bracket, which means that that 22% is not going to be enough. And so RSUs are one of the most common ways that we see new clients have unexpected tax bills because they didn't recognize that the withholding on their RSUs was not enough to cover what they actually owe. So now that you understand the key terms related to RSUs, you need to understand some of the big decisions that you'll have to make. And the first big decision is related to taxes, and it's making sure that you know what taxes you actually owe and how you're going to pay those taxes when they come due next April. But then the biggest decision related to your RSUs is the investment decision. And it's, do I hold? Do I sell? What do I do? How do my RSUs factor into my financial and investment plan? And to get help with that decision, you can go over to our website, kbfinancialadvisors.com. You can check out all the great blogs that we've got on how RSUs work. And then make sure that you navigate over to our RSU tax withholding calculator that's going to help you identify that gap between what's being withheld on your RSUs and what you actually owe, to help you with that first big decision related to taxes. And then to get help with that next bigger decision related to your RSUs, the investment decision of whether to sell or whether to hold, go ahead, book a call, and let's talk about how your RSUs are working for you.